Let's go to our first caller in Palm Harbor, and that is Jim. Jim, thanks for calling. Thanks for holding. How are you doing on Magical Monday?
I'm doing pretty good, Steve. I appreciate you very much. I watch your show every day.
Well, thank you for that.
Just like to ask you a question about Micron MU. I bought a small position in it this morning.
Okay. And just how long are you holding it for? What's the plan of attack?
I was looking at a mid to long term.
Mid to long term. Okay, so if we take a look at Micron, here's what we've got to see take place. And I'm going to start off, Jim, by taking a look at the weekly time frame chart. Now, last week, because you are watching us on Tiger TV, just as it did the week of March 16th, last week it continued to move higher and do it with less relative energy out there. That's an indication, and because last week was a dark cloud cover candle, said, okay, I'm going to move a bit lower, which it did this morning. So what price did was it tested Stevie's red line. So if you got in this morning, it's a great, let's say, reward risk opportunity, because if you see price close below what I'll call right now 56.78, Stevie's red line, what you should anticipate is a move back to this is a weekly chart I'm looking at, probably to the week of May 4th. And that's in the $45 level. So you want to watch my red line figure of 56.78, really kind of like a hawk. Let's say you don't have Stevie's red line on your system, then what would you do? I'd be paying attention to the gap to the upside that took place on May 22nd. There was 111 million shares inside that move. Price came back a couple days ago with 101 million shares, not what you wanted to see. Then on Friday, toned down to 74. Today you're at about 45. You just don't want to see price close below the 56.47 level out there. So the question is, and what I do know, I know you want to hold this for an intermediate period of time, and maybe that's going to work out, but you've got some substantial resistance inside of Micron in the 62.63, 63.42, and 64.66 level that it has to get through. So that's what I see on the intermediate and the daily charts out there. Does that help at all?
Sure does. I really appreciate it. Yeah, I knew there was some resistance up there, and but my background's electronics, and I kind of understand about memory, and
Yes.
I think there's going to be just tremendous needs for memory going forward, and I realize there's going to be some volatility in anything with tech, but I really like the company.
No, look, I get it. And you talk about long term, you said intermediate to long term. So I started with the intermediate term time frame. And long term, this looks pretty good out here. And I'm looking at a monthly time frame chart. But nonetheless, this still needs to get through resistance. Each time it's been up, which is when I say each time, we're talking on a daily chart, just really 3 times. I'm referring to the March 13th high up at the 63.42 level. This is where the bears have jumped on board. So when you've got a gap that took place a few days ago and there was some volume behind the move, so price came down to support. Just don't let it bust through that support, because longer term, you very well, I'm sure, are correct. And I just want to help you try to position it with regard to, when to, from a trading standpoint, when to call it quits and then come back in. So just keep your losses small as much as you can. Okay, my friend?
Okay, I really, really appreciate it. And like I said, I watch your show every day. I just think you're great, and appreciate your help.
Well, well, thank you so much for those kind comments. Much appreciated, and always call in. That was Jim in Palm Harbor. The second question.